At COP28, a variety of countries, including the United States, France, Japan, among many others, signed a declaration to triple nuclear energy capacity by 2050. The World Nuclear Association tracks nuclear energy reactors, and we can currently see that 61 nuclear reactors are being built around the world. 26 of those are being built in China, and another 8 in India. So it's safe to say we are witnessing a revival, the beginnings of a nuclear energy renaissance. And the question is, what stocks can we invest in to benefit from this trend? There are 3 different groupings of possible stocks that we'll go over in this video. The first is companies involved in building out the nuclear fuel cycle, whether that be miners extracting the raw uranium, royalty companies, or even buying physical uranium itself. The second group consists of large utilities that currently operate existing nuclear reactors that could build more in the future. And the third is a new trend emerging in the nuclear reactor sector, actual developers of new nuclear reactor technology, typically companies developing small modular reactors. So we'll start off by talking about the nuclear fuel cycle, and particularly the mining companies. There are 3 different types of mining companies, which are all at different stages of the mining cycle. There are explorers, who do not currently have a uranium deposit, but they're looking for one or expanding a recent discovery. Once a mining company thinks they have a potential economically viable deposit, they enter the development stage of the mining cycle, which involves various studies to try to determine the viability of creating a new mine. And if those studies go well, it'll take them at least several years to build out a mine and start producing uranium. Very few companies ever make it to this point and actually produce any ore, but if they do, they're officially a producer, which is the third type of mining company. So those are the 3 different types you can choose from. Since there are far too many mining companies in the uranium space for me to talk about them individually, I'm going to have 4 pages of them scroll by relatively fast. You can pause as much as you like to see the names, but there's just too many companies in this category for me to go over them all. There will be plenty of companies for you to research there if you're interested. If mining companies aren't quite your speed, there are a few other ways to take a stab at the early stages of the nuclear fuel cycle. One way is with royalty companies like Uranium Royalty Corp, ticker UROY. This is the only royalty company focused on uranium for now, and the company has bought royalties on 18 different uranium projects so far. UROY injects capital into a uranium project, and in exchange, they get a royalty on a certain percentage of the revenues or profits a mine will eventually generate when it goes into production. This is typically a less capital-intensive or risky way of investing in commodities, but you do give up a lot of the upside you could have if you owned a mine itself. So there are trade-offs, but that is one investable option. The next possibility you could consider is buying physical uranium itself. And I don't mean buying drums of uranium and storing them in your backyard. I'm talking about the Sprott Physical Uranium Trust, ticker U-UN, or Yellowcake, listed in London, ticker YCA. These funds actually raise money and buy physical uranium, taking supply out of the market. So if the spot price of uranium is going higher, then so is the value of these funds. So that's a direct way to invest in the commodity without taking on the risk of trying to develop a uranium property. There aren't many profitable companies in the uranium space, but Centrus Energy, ticker LEU, is one of them. In contrast to the miners, Centrus is a player further up in the nuclear fuel supply chain. Centrus Energy is a supplier of enriched uranium, so they're not involved in mining the ore itself. I'm not going to explain the whole nuclear fuel cycle, that's not what this video is about, but they are comfortably profitable with multiple facilities up and running, so they are another safer way to play the industry's rise. If you want a diversified approach of investing in the miners, there are several ETFs to choose from. There's the Global X Uranium ETF, ticker URA, and the Sprott Uranium Miners ETF, ticker URNM. They both own a diversified portfolio of mining stocks. And if you want to add some exposure to utility companies that operate nuclear power plants, there's also the VanEck Uranium Plus Nuclear Energy ETF. This ETF owns both uranium miners and utilities with a large exposure to nuclear energy. Now with all that said, let me explain why I think buying the miners or the individual commodity itself is not the best way to play the nuclear energy trend, as much as uranium investors might not like me saying that. Yes, China and India are currently building out a significant amount of reactors, and uranium is currently in a supply deficit, so there is certainly an opportunity there. But if you're going to buy mining companies, that is inevitably a trade. Commodities are not a good thing to buy and hold over a long period of time. They are inherently cyclical by nature. This tends to make them terrible investments over more than just a few years at a time. And most of their money is made in quite short time spans when the commodity is in a bull market. Those few short years are then followed by years, if not a decade or more, of poor returns as too much supply comes online. This is exactly what happened after the bull market that uranium experienced in the late 2000s. After that point, uranium was in a bear market for over a decade. The fuel cycle is very different from investing in the companies directly involved in nuclear energy power generation. The refueling cycle with uranium is dictated by long-term contracts. Power plants want certainty that they can have uranium to fuel their nuclear reactors. So when all those contracts are locked in and supply is inevitably plentiful as too many mines come online, then that leads to a price crash. This happens every time, like clockwork. So I don't think buying mining companies are a good way to play this trend unless you want to make a relatively short-term trade. It's up to you, of course. If you're going to buy mining companies, then it'll be important to follow what is called the Lassonde curve, which shows the life cycle of a mineral discovery. The best times to invest in a mining company are when they're on the brink of making a new discovery in the exploration stage, or when they're close to completing the build-out of a new mine. What we want to avoid is investing in the development stage, where the hype dies as a company needs to take years to build out infrastructure or complete economic studies, and oftentimes needs to dilute significantly. So that's a bit of a warning there. The next major group of potential investment options are the established utilities. There are a variety of power generation utility companies that operate large fleets of nuclear reactors. Investing in utilities is certainly a safer option than mining companies, but utilities are not known to be high-growth companies. And while fuel is not typically a very large cost for the nuclear power plants, the rising cost of uranium is certainly not helpful for these companies if they need to buy more supply. As far as the possible investments you can choose from for utilities, we can look at a list of the largest nuclear power providing utilities in the US. Most of these companies are public. The graph is showing how much megawatts of power each company produces. On the right is a list of all the companies that are public, and we'll start from the top. Constellation Energy is the largest producer, ticker CEG, and Constellation has 13 nuclear power plants in total. Duke Energy, ticker DUK, is the second largest producer with 6 nuclear power plants. Dominion Energy, ticker D, has 4 nuclear power plants in their fleet. Southern Company, ticker SO, operates 3 different power plants. And they're the company building the first nuclear power plant reactors in decades with the Vogtle units in Georgia. Public Service Enterprise Group, ticker PEG, is next. They own 3 nuclear power plants and own 50% of another 2. NextEra Energy, ticker NEE, operates 3 nuclear power plants. And lastly, Entergy Corporation, ticker ETR, has 4 different nuclear power plants. So those are the largest public operators you can look into. Moving on to the final group of investable options, we have the companies actually developing the nuclear reactor technology. You can see how these types of stocks could do quite well in a very pro-nuclear environment over the coming decades. So we'll start off with some of the diversified options, and then we'll get into the pure plays. One of the non-pure play options is Rolls-Royce, ticker RR.L on the London Stock Exchange. The company is primarily an aerospace and defense systems producer, but they also provide nuclear reactors for submarines, and they're developing a small modular nuclear reactor as well. So they offer some exposure to the space. Cameco is another option, ticker CCJ. They're one of the largest uranium miners in the world, so they are part of the nuclear fuel cycle. They also bought a 49% interest in Westinghouse last year. Westinghouse is one of the largest suppliers of nuclear reactor technology in the Western world, so Cameco offers a slightly more diversified portfolio after that acquisition. That's something to consider. Getting into the public pure play companies, where you can just invest in the nuclear reactor technology itself, we have one existing stock, and a few that could be coming to public markets pretty soon. The stock that's already listed is NuScale Power, ticker SMR. This is the company with the first and only SMR technology that's been approved by the US Nuclear Regulatory Commission. And that's a pretty big deal and not very easy to do. But the company doesn't come without its problems. Their first full-scale plant was going to be the carbon-free power project, and unfortunately the plan was scrapped last year due to a lack of subscription demand. Even if it was going to go through, the plant was projected to be completed in 2029. So that was still a long ways away before the company could see any energy production. That's a problem for a startup like this. Looking at their latest financials, we can see the company has around $160 million in current assets, $117 million of that being cash, compared to a burn rate of $58 million a quarter. Even as the company has announced that they're working on cost cutting and reducing their workforce, raising money seems to be an inevitability. And the stock is currently down 70% since they went public via SPAC in 2022. Safe to say the stock is too risky to buy right now, in my opinion. As far as other options, we have another company that could be coming soon. Oklo is another business developing new nuclear reactor technology, and they will be going public in 2024. It's worth noting that Oklo's chairman is the CEO of OpenAI, Sam Altman. He's backing the company financially as well, so that could be one to watch out for. Lastly, we have another SMR company that was going to go public, X Energy, in another SPAC. But they saw how SMR has been trading in the public markets and they decided to terminate the deal. So we'll see if they end up going public later on, but they backed out for now. So as far as a viable long-term investment option to take advantage of the rise of nuclear energy, as things currently stand right now, I don't see any great options. Mining is too cyclical, utilities don't have great growth prospects, and the only public pure-play technology option is not looking good financially. If you're looking for a short-term option, the miners show promise, but that's not something that I'm personally interested in investing in. Either way, I've laid out a lot of different investment options for you in this video. If there are any others worth noting that I haven't discussed, feel free to throw them in the comments below. And if you're interested in learning about other investing opportunities that could benefit from the energy transition, then consider checking out some of the other videos on my channel, Green Investing. Otherwise, thanks for watching.